Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Tuesday, the 21st of July. Starting off with Braveheart, where it appears that people are really enthusiastic about the stock, probably even more enthusiastic than Mel Gibson would be. You can see here that we've got a line of resistance broken yesterday, and also the 200-day moving average at 13.6 pence. Broken too. Nice consolidation so far today near the highs of yesterday. Probably just looking for an end of day close above recent neckline resistance, the initial July resistance 17.25, and maybe up to the 50-day line 18.25. Above that sort of area, we could see the shares finally retrace the pullback from the May peak seen in so many of these stocks. And a potential target there about or around the 35-37 pence area, especially while we hold above the 200-day line. One of the big winners today has been Conroy Gold. If I can get the chart on the screen, it was sort of moving around here, breaking that line of resistance at the beginning of the month. That line from February around 11-12 pence. Nice sideways action, as if somebody knew what was coming, and a very strong green candle there the week before last, as if somebody definitely knew what was coming. And obviously we've had now the spike to hit the top of that rising trend channel from February at 24 pence, which was the mooted target on the stock. We had a little bit of an overshoot. But probably what will be interesting now, once the dust settles, to see whether there's a new leg to the upside. Just how far the shares could stretch above 24 pence once we've done all our consolidation is suggested by that line of resistance from September last year heading towards 35. So above 25 pence, let's say, on an end of day close basis, looking at 35 pence as a best case scenario target. And given how long the shares consolidated and were bubbling up, 35p could be a valid target. At this stage, only a weekly close back below 18 pence February resistance would really delay the upside scenario. At the moment, let's just see if we can close above that or well above that today. Away from the most talked about stocks, up to one which just has a good looking charting setup here. Carclo breaking that line of resistance from January at the beginning of the month. Sideways action since then, gap through the 200-day line around 10.5 pence today, and really while we're above 10 pence, looking for a move towards the top of that rising trend channel from January, heading as high as 20 pence. Nice extended base there over the last 6 months or so, so that hopefully that will stand the stock in good stead over coming weeks. Difficult to avoid looking at anything with pharma in its name. Evgen Pharma, typical of many of the stocks in this space that we've seen. So the fallback from the May peak, roughly 50% of the gains given back over the retracement, bounced off the 200-day moving average at 8.5 pence, and really while we're above that, looking for a resistance line projection from January heading as high as 22 pence. Nice break of that May resistance line, and the 50-day line today at 11 pence should mean that the shares are finally on their way. Just to confirm, you want to see an end of day close above the 50-day line today to be that much more sure that the shares are heading up to their designated target. I covered a lot of pharma stocks over the weekend, which seems like a long time ago now. We had Gene Drive, I think, trading on Friday in the mid to low 60s. It was suggested on Sunday that if you were an aggressive trader, then you would have the buying opportunity of buying at the bottom of this falling wedge from May, and that's proved to be the case. I saw some people saying that they bought at 65. End of day close above the wedge today would be the official starting gun on an extra bullish or a new bullish phase. So 100 pence plus today. Initial target then the 50-day line at 125, and the best case scenario target over the next month or two up to the top of that broadening triangle from May at 240 or 250. as a best case scenario. Stop loss at this stage, probably difficult to have it any tighter than just below 80 pence, which is today's intraday low to date. On to another Pharma hero, N4 Pharma. Here we've got a break. It's a little bit slower in terms of its move compared to others, but we've broken that falling wedge from April in this case, around 4.5 pence. And while we're above that, looking for a move towards the top of that rising trend channel from back in August last year at 9 pence plus. Stop loss at this stage back below the 200-day line, or around the 200-day line at 3.8 pence should do the trick. Had some trepidation in terms of looking at NSF last week, but it would appear that there was no need to have any doubt. Shares broke that line of resistance from the end of June at 5 pence and closed above it, well above it yesterday. We've broken through the 20-day line at 6 pence today, and above the 20-day line looking for at least the 50-day moving average at just under 10 pence. The 50-day line's capped the price action basically since early May. For fans of the shares, best case scenario target here over the next month or two would be the top of that broadening triangle from the end of May, heading towards 27 pence. All of that value while we hold above 5 pence, which doesn't look like it will be too difficult over the near term. I was complaining yesterday that I thought that, I think it was around this time yesterday, between 9 and 10 o'clock, that shares of Mega Diagnostics were still just in the mid to low 40s, which seemed to be rather disappointing. The initial target there was the 50-day moving average at 51 pence. That's been easily cleared. The big bonus for the bulls today would be to close above 1 month resistance at 60 pence. And if we can do that, then we can start dreaming of the big target here up to that April resistance line projection, the top of the broadening triangle from that month, heading as high as £1.40. This stage, only really back below the 50-day line at 51 pence would really dampen the enthusiasm on a technical basis for the shares. Just wanted to cover a rather more boring situation, President Energy. The reason for that is it seems to have the same sort of setup that Conroy Gold had, i.e. breaking a line of resistance after a long consolidation and then just trading sideways. Actually, a tight sideways price action can be one of the strongest around. So you have a sort of step fashion so that you're up sideways and then up again. Let's see if we can do that in this situation. The level to beat around 1.85 on an end of day close basis, which was yesterday's intraday peak. If we do that, I would say that the shares are well on their way to the top of that broadening triangle from the end of March up to 3 pence. Stop loss back below 1.5, so a reasonable risk reward on that situation. Apart from Braveheart, we've got equal enthusiasm for Physiomics, and perhaps rightly so. We've just broken that neckline resistance there at 8 pence from last month, and an end of day close above that should take the shares up to the top of the rising trend channel from April, heading up, I suppose, up to 14 pence could be the destination as soon as the end of next month, or the way things are going, rather sooner than that. Stock of the moment, and perhaps one of the stocks of the year, well, certainly one of the stocks of the year, is Synergen. The late call yesterday was that hopefully the shares would remain above 180, which was a bit of a finger in the air notional support. In fact, the low today was 168 just after the open, but we bounced very strongly after that. The two levels in play now, apart from today's 168 pence low, which is good of the stock to give us that level for stop loss purposes, are 240, which is the first resistance line projection there from February, and then as a best case scenario up to £4.20, which is that March resistance line projection. The way things are going at the moment, one has to say, given that we've already retraced, I suppose, a third of yesterday's range at the low of the day, one would say that we're looking at a sort of 8 to 9 out of 10 scenario here in terms of how strong this stock is, and one would expect 240 pence to be broken, and 420 pence, the journey towards that anyway, to be started over the next few sessions. Just a couple of situations to go, not quite as exciting as Synergen, obviously, but Panoply Holdings, a relatively obscure stock, gapped up today through previous June resistance, and that's now become new support. Got a rising trend channel that I've drawn there from December. Top of the channel heading towards £1.35, and a decent end of day close above the initial 2020 resistance at 87 pence today. Should see the shares on their way towards that target again over the next 4 to 6 weeks, probably, given the way the stock is moving or has just moved. Finishing off with Xeris Technology, which has had a few mentions here previously, bit of smart buying allegedly coming in here. Rising trend channel from March, looks rather thin on this daily chart, but quite a wide feature actually, 1.2 to actually up to 2.1 pence. So 2.1 pence the target there, especially while we hold above the 200-day moving average at 1.39 pence. Ideally, we don't now break back below 1.5 pence, which has been a near-term resistance, now becoming new support. And above 1.5, easily up to 2.1. As I said, the stop loss back below the 200-day moving average at 1.39 pence. That's it for me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.